Welcome to This Week in Money. I'm Jim Goddard. Today, James Corbett from the International Forecaster Weekly warns China and Japan could be teetering on the brink of financial disaster. Tim Cyclesman Wood comments on some interesting moves in the equity markets that may be a sign of what to expect in the near future. We talk to James Corbett right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is James Corbett, contributing editor for the International Forecaster Weekly. Welcome to the show, James.
Well, thank you for having me on. It's a pleasure to be here.
And we should let people know you're talking to us from overseas, from precisely where?
From Western Japan, actually. So I've been out here for 10 years now, and I've been running my own website for 7 years and keeping an eye on what's happening here in Japan, but also what's happening in markets around the globe.
Near the end of the interview, we'll let people know exactly how they can get a hold of you and find out more about the International Forecaster Weekly. Well, first off, let's talk about business in Japan. Has their new economic plan worked out the way they had hoped it would?
It certainly has not, or perhaps a better way to put that is that some parts of it have, but the other parts have not, and that's problematic because if they're not all functioning, then it's actually hurting the economy. What we're talking about here, for people who don't know, is Abenomics, which is this plan that the new government under Shinzo Abe, that's now been in power for about 2 years here in Japan, has had since the time that it came in to try to stimulate the Japanese economy by basically taking a page out of the Federal Reserve's book and trying to double the monetary base here in Japan over the course of 2 years. And they've been, I suppose, quite successful in that, in that the Bank of Japan has been very broadly expanding the monetary base here very quickly. But unfortunately, the operative part of this entire plan was to actually stimulate the Japanese economy. And of course, that's not going to actually have a positive effect unless corporations also are increasing wages, because of course there is an inflationary push with this expansion of the monetary base. However, we do not see wages in Japan increasing. In fact, Japan base wage earnings have just declined for the 24th straight month. And in fact, in the past 6 years, there has only been 3 months of positive wage growth. So this is obviously an economy that's, I think at this point it might even be safe to say, in terminal decline, or at least in terminal stagnation, as it has been since the bubble of the 1980s popped in early 1990s. We've seen the Japanese economy going sideways. And this Abenomics plan, although it was highly hailed at the time that it came out, and although it did produce some positive effect on the GDP growth figures here when it first went into effect, that seems to have been mostly a result of positive expectations for the program rather than anything concrete. And now, as the Abenomics plan continues to unfold and continues to not produce any positive effects for the average worker here in Japan, I think there's a growing sentiment that this is a failed policy, although it's not one that's really been abandoned yet, but it's certainly not one that's being trumpeted like it was when Abe first got into power.
I know in China, they have a different philosophy now when it comes to economics, that they want to see a consumer-based economy, not just one where they export things to people that the objects that they've manufactured, but they'd like to see their own people to be able to afford them, buy them, and start driving their own economy internally. What's going to happen to Japan if the people there are seeing their wages fall every year?
Well, in Japan, obviously, there's going to be just a decreasing standard of living, and I think that this is a process that's been going on for the past 2 decades. And what was formerly the second largest economy in the world, now the third largest, and I would say falling probably compared to the others that are catching up to them. I do not expect that Japan is going to have some turnaround in its economy because, again, even as a manufacturing export base for high-tech goods, which is really the way that it built up in that 1980s period and is still somewhat known for, I think it's being surpassed by many different markets, and I don't think there's a way to turn that around. But you're exactly right when it comes to the Chinese economy and what they're attempting to do, which is an extremely delicate process, because for the last 5 years or so of Chinese economic growth, that has been highly dependent on the spigots of credit creation being wide open in the Chinese banking system, not only the PBOC, but the shadow banking system in China, which has grown to mammoth proportions and it really has been this credit growth that has been keeping that economy at its blistering pace of growth for the past several years. But now they're trying to, as you say, turn from an export economy into one that's driven by internal consumer demand. And in order to do that, they are going to have to start shutting off those spigots of credit creation and trying to boost just internal demand for products, etc. But that's an extremely delicate process, and they've tried doing this over the past few years, and every time they try to tighten up on credit, there's a major problem, cash crunch. There was a threat of default in the shadow banking system earlier this year. The PBOC had to step in with a flood of extra credit. So they're having a very difficult time of this. It's a balancing act. And of course, this is, I think, in service to the longer term goal of eventually making the renminbi, the Chinese yuan, fully convertible, which is an entirely other process that they're going through right now, that they're starting to go through the sort of formal stages of this, with the Bank of China winning clearing deals with in the euro area and with London earlier this month. They're starting to form clearing banks for buying Chinese denominated debt in European markets, in British markets, elsewhere in the globe. But it's a very slow process of this creation of the fully convertible renminbi. And it is, again, it's going to be a huge changeover in the Chinese economy, one that the Chinese economy may not be able to support. And while they're dealing with all of this, they're also still dealing with problems at home with regards to a property bubble, which they've been trying to keep the lid on through capital controls for quite a while, but that is threatening to burst. And some economists, in fact, last month, some Japanese economists came out with the assessment that the Chinese property bubble has already burst and will not be able to reinflate ever again because of the demographic conditions in China, with the peak growth in birth rate having peaked in 1987 and a decline in birth rate since then, which will eventually translate into a shrinking population. So there's a lot of headwinds facing the Chinese economy, and it's difficult to see if they're going to be able to complete this balancing act and actually switch over to a domestic economy.
Will China end up regretting their one-child policy?
In some ways, I think that there's going to be an economic, definitely an economic squeeze as a result of the declining birth rate, and which again will translate into a declining population at a certain point later this century. But I think if anyone is going to be the canary in the coal mine when it comes to that type of demographic squeeze, it is certainly Japan, where we are already seeing a declining population, the population falling by its largest amount ever last year. And that's only going to continue and accelerate from here on in. And in fact, just one of the signs that this is a real phenomenon that's taking place is that now in Japan, adult diapers actually outsell baby diapers. So we are definitely in an aging and dying population here in Japan, and that's going to have huge ramifications for the attempt to stimulate the Japanese economy as Japanese workers get saddled with a larger and larger burden of trying to support more and more retirees.
Japan has never had a very generous immigration policy. Any chance of that changing?
There's a lot of talk about that changing. It's not quite certain exactly how this is going to translate into actual action at this point. They're experimenting with economic zones where they're going to be lifting certain visa restrictions, etc. They're trying to attract skilled and talented workers and laborers and investors and that sort of high level functions to the Japanese economy. But again, it's difficult to know how they're going to actually be able to do that, other than just trying to take off some of the red tape in terms of visas. But it seems like a very, very small step. Although for the Japanese culture at large, it is a large step. Of course, it's a very insular culture, and it has been for thousands of years. So it is a kind of a big sell to the average Japanese person to think about allowing more foreigners into the country. But it is something that is going to happen at some point, just economically speaking.
Well, I know personally several friends who I worked with in radio in Vancouver moved to China and say life has never been better for them.
That is probably, I mean, I wouldn't doubt that that is the case, because obviously China has been undergoing that kind of boom economy for a number of years now. As I say, the last 5 years or so of that has been mostly credit fueled rather than actual productive growth. But still, China is one of the fastest growing economies. There's a lot of money to be made in that economy as it continues to grow, if you know what you're doing and if you have the right connections. But I think it's very uncertain how that's going to play out from this point as they try to rebalance the economy and try to get the domestic demand going rather than the export-based economy. It's going to be a very difficult transition, and there is the possibility of the shadow banking sector, which is already well overextended with a lot of very fantastic products that are almost too good to believe. There's a lot of possibility of one of those defaulting and starting a knock-on domino effect in the shadow banking sector. And if that happens, I think all bets are off in terms of Chinese growth from that point.
Will they still be a big market for this big push to have Canadian oil and gas shipped to China? If that doesn't happen right away and it takes, say, 8 or 10 years, will they even be a big market to go after by then?
Well, I suppose that's the very big question. All trends being equal, and if we do see things developing as they have been, then there's no doubt that China is an exceptionally energy-hungry market. In fact, it surpassed the U.S. last year as the world's largest oil importer, and by 2018, I believe, 2019, it's expected to account for something in the neighborhood of I can't remember the figure off the top of my head, something like 70% of total world demand is going to be from China by 2020, according to global energy consultancies. So just a phenomenal amount of oil and energy consumption going on in China right now, and that is obviously creating a huge demand for access to markets all over the world. So it certainly does make economic sense for various oil exporters, including, of course, Canada, to be looking at the Chinese market. But again, of course, this is contingent on that type of growth pattern continuing. And once again, I mean, if there is some sort of banking default, if there is some property bubble burst or some other catastrophic effects in the Chinese economy, that could certainly change that calculus. But it's difficult to imagine that that's going to completely derail the trajectory that China is on right now, or derail that demand that China is undergoing right now.
I heard in China they're selling 50,000 cars a day, which would be a tremendous sales figure for any country.
It is, and in fact, it fluctuates, and there are cooling periods in the automobile industry there. But for example, last September alone, there was a 21% rise in sales in automobiles in China, and certainly demand doesn't seem to be dying off at this point. So it is a phenomenal. Again, no matter what industry you're looking at, there are phenomenal growth happening, and there's a lot of opportunity there if people have the right connections and are able to tap into that demand.
Can China's ecology, its environment, stand any more development?
Well, that's, of course, a very good question, and it's one that not only affects China, but some of the surrounding countries, including here in Japan, where we do get some of the pollution fallout from what's happening in China. And it is a major health concern in a lot of places. And I was in Beijing last year, or was it the year before? And it was one of the number one news stories every day when I was reading the paper. They were talking about the PM 2.5, these particle emissions that are closely monitored now, and people are very concerned about them, obviously creating a lot of health issues. Certainly, environmentally, China has suffered a great deal from its development over the past couple of decades, and the Chinese people are well aware of this, and I think are perhaps at their limits in terms of what they're willing to take along those lines. So again, I think that's another reason why China has to start to transition out of its out of what it's been undergoing for the past 2 decades, which is basically just being the manufacturing base for the world, and into a more balanced economy. But it's difficult again to see how they're going to get there without derailing and upsetting the apple cart that they've put into place with this credit tidal wave of credit that they've unleashed.
And how do they get people to move into these large pre-built cities of 600,000 where right now they have a couple of thousand residents?
It's a good question, and I think if they had the answer to that, they would already be applying it. As people might know, and as they can check online very easily, there are these massive cities that have been built that are basically ghost towns, and it is quite eerie to look at these monumental and very cutting-edge and high-tech modern cities that have been constructed with basically no one living there. It's a bizarre thing, and of course, this is just one of the ramifications of the type of tidal wave of credit that we've seen in China. It has to go somewhere, so a lot of it has gone to construction of these massive infrastructure projects and construction of these mammoth cities where no one is even living there. I think to a certain extent, I mean, obviously in the long run, they are going to try to populate this by basically getting rural residents into those types of metropolitan areas. But to a certain extent, I mean, I don't think that's even the important part at this point. I mean, the important part is sopping up that credit and using it in some productive way. So I think that's what the purpose of building these has been. But over the course of the next decade, of course, they are planning the largest migration in the history of the human species, where they're going to be trying to get I can't even remember the number, but just some inordinate number, hundreds of millions of rural residents of China into some of these major urban areas, and it's going to be almost mind-boggling to even contemplate how this is going to happen or the logistics of it and how they're going to affect that without running up property prices to levels that are even crazier than what they are now, which is, of course, why they've been very, very concerned about rising property prices, even as they are now, before this great migration really begins in earnest. It's going to, again, there are so many ways in which China is balanced on a knife edge that could upset at any point that it really is, I think, worrying for people who are putting all of their eggs in the Chinese economy basket. And unfortunately, given the way the global economy has shaped up over the past decade, more and more of the global economy's eggs are in the Chinese basket. So it is a situation that I think everyone from North America to Europe to other sections of the globe, Africa, where there's a lot of Chinese investment, should be and are concerned about what's happening in China and how they proceed from here.
More with James Corbett next on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. I'm Jim Goddard. I'm speaking with James Corbett, contributing editor to the International Forecaster Weekly, and we'll tell you in just a few minutes on how you can subscribe to the weekly. What's the fallout business-wise from the Fukushima meltdown and the tsunami in general? Have they recovered in Japan, or is this going to be a long, long process?
Well, I think what it's done is skewed the Japanese economy somewhat because, of course, we have looked at billions of dollars in reconstruction that's gone into reconstructing the tsunami-affected areas, and of course, all the hundreds of millions that have been spent on the Fukushima cleanup itself, which has obviously skewed the economy to a certain extent, and it did, of course, cause, in the immediate wake of that tsunami, it did cause an influx of yen as the Japanese government was, of course, trying to repatriate some yen in order to deal with this and inject some of that bailout money to TEPCO, the Tokyo Electric Power Company, and to facilitate the reconstruction. So we saw, of course, a rise of the yen against the dollar at that time, which has declined somewhat since then as the yen carry trade has picked up once again. But it certainly has skewed the economy, and of course a lot of it has gone into construction and things of that nature, which notoriously in Japan is a very corrupt type of industry, and there are basically corruption from both sides of the scale. There's of course Japanese mafia corruption in the construction industry. There's also a lot of Japanese police involvement in construction. A lot of contracts get steered towards retired policemen who start up their own construction companies and things of that sort. And of course, that's only exacerbated by the fact that now the 2020 Olympics are coming to Tokyo, so there's going to be a lot of construction centered around that. So there's a lot of that type of stimulus, I suppose, that's going on, but it's a lot of broken window fallacy type stimulus in which basically this money is just being redirected towards the construction industry and reconstruction and things of that nature, rather than into anything that's actually productive to the economy in general or to most of the workers here. So again, a lot of this wealth, I suppose, that's been created through these reconstruction projects has absolutely completely failed to trickle down to the average worker.
And I was going to say, people rarely pay taxes on that money.
Well, it's a bizarre situation because, of course, the Japanese government has effectively taken over TEPCO. They are now majority holders in TEPCO. So, in effect, the problem at Fukushima has been nationalized, and it is ultimately the Japanese taxpayer that's on the hook for all of the money that's being flooded into the Fukushima site to help facilitate that cleanup and the ongoing efforts to try to mitigate what's happening there. So in effect, that problem has just been nationalized, and it just contributes to the already unbelievable debt burden of the Japanese government, which is already over 250% of GDP. It's just skyrocketing and mind-boggling. And of course, to try to put some sort of attempt into making it look like they're going to actually secure that debt, the Japanese government earlier this year, back in April, raised the consumption tax from 5% to 8%. But of course, in an economy where there is already inflation ongoing and there is 24 months now straight of Japanese wage declines, it is already putting a huge squeeze on the average worker here. And we saw some positive Q1 GDP results as a result of people front-loading major purchases ahead of that consumption tax increase. But that just means that the Q2 figures, by all accounts, everyone is expecting them to be quite dismal. And this consumption tax increase is really just going to put a damper on any hope of any economic recovery from all of this. So there's a lot of squeezes coming from a lot of different directions, and they all seem to be targeting the average Japanese worker. So once again, we are seeing living standards declining here at a precipitous rate.
Governments have always relied on a large middle class to fund most of their actions. As the middle class shrinks and loses its buying power, who's going to pay for government?
Well, it's actually a double bind here in Japan because, of course, the largest holders of Japanese debt are the Japanese themselves. Japanese workers, just average Japanese people are large holders of Japanese government bonds. JGBs have been traditionally just the standard way of saving one's wealth long term here in Japan. So a lot of pension plans are built around that. But unfortunately, again, now that a lot of retirees are retiring and are getting out of that out of the economy, there are fewer and fewer people who are able and in a position to buy Japanese government bonds, and more people who are selling into that market. So that's even exacerbating that problem further. And again, just as a demographic reality, that can only be accelerating. There's no way for that to really change at this point. So again, it's a very good question. The Japanese government really is facing enormous problems in terms of being able to secure its debt from this point forward. And I think there are real questions about the ultimate solvency of the Japanese government looking longer term from here. And I think it's really a question of when the world markets start calling them out on that. And again, there are a lot of questions that swirl around that process and how long the government will be able to prolong it. But there are just structurally inherent reasons why the Japanese economy and the debt system for the government is operating on is bound to fold at some point. So I think once again, the idea of trying to bring in foreign workers is absolutely essential to trying to keep the Japanese economy afloat, and it's a very slow process with a lot of bureaucratic red tape that's slowing things down even further.
And of course, as you mentioned, China facing a possible, very real estate bubble combined with Japan's shrinking economy. How's that going to affect North American business and people living here? Or has there been much thought put into that, and people there are just concentrating on trying to solve their problem without worrying how it's going to spill over?
Well, I think that, yeah, I think the average person here probably isn't worrying about that, but I think it is going to affect what's happening in North America for a number of different reasons. I mean, for example, the way the Chinese government is attempting to combat that property bubble is through capital controls that mean that a lot of people in China with a growing amount of wealth are looking for ways to try to secure that wealth that they are not, but that those channels don't really exist within China. So a lot of that investment money is flooding out of the country and into, a lot of it is going into U.S. real estate. So, I mean, just as one very notable example, we had the purchase of Chase Manhattan's headquarters, J.P. Morgan's headquarters in Manhattan, sold for $750 million to a Chinese company last year. So, I mean, that's just one example of this phenomenon, but it's certainly ongoing. So I think the Chinese spillover is directly affecting what's happening in the U.S., with some of the U.S. markets now overheating even more than they were in the housing bubble of last year. And this is not based on demand by average men and women forming families and forming households and buying houses. This is mostly, again, an investment-driven phenomenon. So again, some worrying signs developing in the U.S. Housing market that really has somewhat to do with the Chinese phenomenon. And also, of course, the Japanese yen carry trade, as I alluded to earlier, is ongoing and is in fact increasing even. It's at its highest level since 2008, according to a gauge that came out earlier this year. So again, there's a lot that's hinging on the Japanese economy and the fact that Japan is furiously devaluing the yen right now. But if that were to unwind or if that were to fail, then obviously a lot of that yen carry trade would reverse, and of course that would have an adverse effect on the dollar. So again, we'll have to see how this plays out, but there are a lot of ways that the North American economy is certainly riding on what happens here in East Asia.
Sure, because billions are being invested into liquefied natural gas to be shipped to Asia. Big plans for oil pipelines from the West Coast to carry oil to China to be refined. And all these things, of course, are based, as you said, on healthy economies. If they go sideways, the billions spent here will have been for no reason.
That's right. But of course, Canada is in an interesting position because, of course, they're still ongoing with deliberations about the Keystone pipeline and whether or not that will ever come to fruition and be able to get that oil down to the refineries in Houston. If not, I mean, certainly the idea right now of the Northern Gateway pipeline, which was actually just approved earlier this month by the Harper government, is very tempting and potentially quite lucrative, again, depending on the state of the Chinese economy and the economies in Asia generally. But certainly there's a lot that's riding on that right now, and a lot of investment money is going into that, including the creation of that Northern Gateway pipeline. So certainly a lot of people are betting on this process continuing. So I think there's a lot of people with skin in the game, so to speak, that are very interested in making sure that this collapse of the Chinese or Japanese demand does not decrease at this point.
And what about India? How does it play into this? Or is there the same kind of energy demand there?
There is energy demand. India is a much slower growing market and one that is certainly experiencing its own problems, as we saw last year with this precipitous decline in the rupee that they were trying to solve. There was a lot of problems with that. They brought in a new Bank of India governor for the Reserve Bank there, but it's still a situation where there's a lot of problems structurally inherent in that market, and I don't think that in the near term is going to be a significant either increase or decrease in terms of global investment demand or in terms of its ability to direct markets. I think in the long term, again, demographically speaking, of course, it's going to be an important, and as a developing economy, it's going to by the middle part of this century is going to be an increasingly important part of the global economy. I don't see that happening in the near term. Although, interestingly, the OECD just came out the other day to talk about how by I believe it's 2020, the BRICS countries are going to dwarf all other countries in the world in terms of being the largest energy producers. By 2030, they're going to overtake the other countries in terms of energy production, and by 2050, it's not even going to be close. The BRICS countries are going to account for about 1/3 of all all of the world's energy production. So again, there are some huge changes that are taking place right now that have been foreseen for quite a number of years and have been talked about at great length. And I think the BRICS grouping is definitely going to be an integral part of that change.
And that's probably why people are in such a rush to get things completed in North America to take advantage of Asia right now, because in the far future, it's not going to be there.
I think that's exactly right, and I think that's the way that the global economy is being structured right now. That seems to be sort of a structural feature of what we're going through right now, is this transition towards that catering to the Asian markets and developing economies in general, but specifically, I think, in Asia.
James, can you give us some information on how people might subscribe to the International Forecaster Weekly?
Yes, the best way to do that is to go to the website. It's theinternationalforecaster.com. That's all one word, theinternationalforecaster, FORECASTER.com. And when you're there, you can see examples of the lead editorial that I write from this week and previous weeks. And you can also subscribe for an introductory copy. If it's your first time subscribing, you can get an introductory copy for free. And you can subscribe outright to the newsletter. It comes out twice a week on Wednesdays and Saturdays, about 30 to 40 pages of information, not only editorials, but market information and a lot of other social, political, other types of commentary and news reports. So I think a valuable source of information. If people are not online or don't want to get online, they can also write in for information at P.O. Box 7752, Winter Haven, Florida 33883. That's P.O. Box 7752, Winter Haven, Florida 33883.
After the break, Tim Cyclesman Wood on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.net. Welcome to the show, Tim.
Jim, thanks for having me.
Just before we went on air, we were discussing what is behind the markets right now, reaching new highs, it seems, every month. They're a year overdue for a downturn, and yet they keep cooking. What is the formula? What are they trying to do there?
Jim, I don't know. You know, it's insanity. Because in going back to 1896, which is the inception of the Dow Jones Industrial Average, there is nothing that compares. Like I said, the longest two extensions into a 4-year cycle top, and let me clarify that for a second. A 4-year cycle averages, going back to 1896, 11 months if you look at the average of all the cycles, 48 months from low to low. The last 4-year cycle low occurred at the 2009 bottom. We're now in June concludes month 63, and we haven't found the top of this thing yet. And so it's extremely stretched, and history also shows that the longer they stretch, the worse the outcome. The previous, and we've talked about this before, but the longest extensions prior to this 4-year cycle had been 60 months. That occurred going into the 1987 top. We know how that ended. And 60 months into the 2007 top, we know how that ended. Jim, when you look at the characteristics of this advance, it is, I know this sounds crazy to say, but when I'm not looking at price, I see prices where price is, I get that. But when you look at the underlying technical foundation, you look at volume, you look at some of the fundamental stuff, you look at the velocity of money, you look at the job participation rate, you look at, the sheer fact that the Fed has had to do what the Fed has had to do to keep it up. That's not something that happens in true secular bull markets. The economy itself fuels that bull market. And that's not what has taken place here. This is an extreme advance that has occurred on poor economic, technical, and fundamental foundation. And it's going to go until it goes. It's going to go until we see those DNA markers to cap it. And when I say DNA markers, for those that maybe haven't heard or followed the program before, let me just briefly say I've gone back again to 1896, and I've found common denominators that have occurred at every 4-year cycle, top and bottom, since 1896. The last markers of a bottom were in 2009, and we have yet to see any marker or indication of a top. And so the data tells me clearly that it's an extension. And the longer it stretches on the surface, people, you think, hey, this is good. It just keeps going and keeps going and keeps going. But a market has to breathe. It has to inhale and exhale and correct. And that hasn't happened. And like I said, the longer these things stretch, the more dangerous they actually become. And then when you combine that with, like I said, the characteristics, the underlying characteristics of this market, it just makes for a really scary situation that I fear just how bad it will be once it sets up.
On Wednesday, the market said an interesting thing. It was called an outside reversal. Maybe explain to us what that is and then why that's one of those, I don't know if it's a DNA marker, but it does make people who watch the markets very nervous.
No, it what that is the market, it opened and traded higher and then turned, reversed down and then closed lower. And, that is a sign of a reversal, and we have been expecting, I've been writing in the short-term updates, we're looking for a short-term, cyclical top, and I think obviously that marked that top. Ideally, unless the longer-term cycles are stretching, that should have also marked an intermediate degree top. And then we should be seeing some sort of a correction down into the intermediate degree lows in the coming month, 6 weeks, something like that. And so, in a normal environment, that downside reversal would tend to indicate that we've probably seen those tops of short and intermediate degree. But, following that decline, the market has actually held up pretty good, so we shall see. Currently, I do still have a short-term sell signal.
More with Tim Wood next on This Week in Money.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.net. Tim, we were wondering, what is behind this manipulation of the market? I mean, when they started off with quantitative easing, throwing out tens of billions of dollars a month, and they're still doing it, just a smaller amount. What is the purpose of extending this thing? We're both asking ourselves that question.
Well, during the advance in 2006 into the 5 and 6 and into 7, when things started to get extreme with that advance, I began to ask myself the question, why? Why would it continue to fuel an overextended move? And, there's not but a couple of logical answers to that. I mean, one, it just seems like the thing to do, and you're trying to save the market and hope that the economy can get a toehold and move on, and that then the economy will pick up and everything will be okay. It's like a Band-Aid. You put the Band-Aid on it and until it heals. And I think that's the way it was presented, and maybe that's the case. But then it reaches a point to where when you see something continue to stretch and stretch and stretch, and you know that the underlying economy is not picking up, and you know that this thing can end well, then you start to have to ask yourself the question, why do they continue to do this? Because in the end, it's only going to make matters worse. And that's what I said. I said it sounded like a broken record, just like what I'm saying now about this rally sounds like a broken record. I preached it and sung it from the rooftops because the data was what the data was. And I said the longer this thing stretches, this is back 2005, 6, and into 7, I said the longer this thing stretches, the worse it's going to be. It's only making matters worse because we had the same problems then with the underlying technical, fundamental, and economic, conditions that we have now. And I said, this is not good. And so now here we are at the longest 4-year cycle advance ever, And it just continues to stretch. And what I'm saying is, it reaches a point where you have to ask yourself, I don't know, Jim. I don't know, why they continue to blow this bubble, ever increasingly tighter and tighter and tighter and tighter. I really don't know.
Well, you were saying if the market was working correctly, any money that was created would be making new jobs. I heard an announcement within the last few weeks that said the U.S. has now regained all the jobs lost in the last recession. But of course, there's more Americans now, and the jobs they're getting are muck jobs. You're having engineers having to drive taxis, taxi drivers having to become gardeners, and they're getting paid less. So to say you have a job doesn't mean you have the same lifestyle or the same ability to contribute to the economy.
Yes, and to that point, let me just say this. This is only logical if people will think about it. And they don't. That's the thing, is people don't think. They can't see what they can't see. And I understand that to some degree, but I'm just saying think. In a true secular bull market environment, what do you have? You have a flourishing economy. You have jobs, and real jobs. I'm not talking about jobs as a door greeter at Walmart or working at Lowe's, and I'm not talking down about anybody, but I'm saying, where's the manufacturing? Where's the industry? Where are the jobs, the real jobs that pay? Where are they? They're non-existent is where they are. Where's the manufacturing base? Where is it? It's overseas. It's in China. And then when you look at the job participation rate, like you said, it's just collapsed. Look at the velocity of money in a secular bull market. When the economy is good, people are spending money and money is changing hands. That's called the velocity of money. Look at that chart. It's down to, I forget, 1978 levels or something like that. So that's down. Look at the volume in the stock market itself. The NYSE volume is collapsed. So, I don't care how many PhDs try to convince me that purple is red, they're wrong. You look at the underlying fundamentals. This is a bear market rally that has occurred in a secular bear market that they have managed to push to a new high and keep it alive, and it's not going to end well. That's just the reality of it. I don't know how long it's going to take before we see the markers and it sets up, but when it does, it's not going to be good. And the problem that people have is they equate higher prices to it being a bull market. This rally is BS. And they've done the same thing. They've done the same thing to create this rally that they did to create the last rally, or to fuel the last rally, and look how it ended. And when I say the last rally, I'm talking about the advance out of the 02 low into the 07 high. Look how that one ended. Why is this one any different? It's not. That's the point. And so, the bearishness is because not of price. I see price. I understand that we're at a new high, but people, I'm telling you, that does not mean this is a secular bull market. It does not mean that this is a sound economy. It does not mean all is well. That's the point that people are missing.
When J.P. Morgan and his buddies huddled up on Jekyll Island off the east coast of the U.S. and created the U.S. Fed, they said the reason for doing that was they were tired of seeing this cycle of crash and boom over and over. They said if we have a central bank where we control it, well, you won't have this problem anymore. Well, what's happened since then?
Nothing, except the bankers, nothing with the cycle. They have it controlled. You can't control the economy to where you have endless good times. Think about it. To have good, you have to have bad. You can't. I don't know how to say it. The cycle itself, Jim, is a purging of the excesses. The cycle itself, the declines are a good thing. It's the ebb and flow of the economy. It's the ebb and flow of of capitalism.
So what they're trying to do then is stop the ocean tide, because it's going to go back and forth. It'll be a little higher some days than others, but it's going to happen, and it doesn't matter if you put your hand up and say stop.
Exactly, and you can't stop it. And I understand the thought process, or the I don't even, that's not the right words either, because I have different thoughts about that. But I understand the concept of trying to smooth the cycles, but it doesn't work that way. It does not work that way. And since 1896, I go back, since 1896, there has been a 4-year cycle in the stock market, pretty much like clockwork. It is, like I said, some of them contract, some of them extend, but on average, it's been 48 months, and that has not changed since the inception of the Dow Jones Industrial Average. We are seeing an extreme this time. Very, very extreme. And what scares me is that when you see extreme conditions in cycles, sometimes the events that finally cap the cycle are just as extreme as the underlying advance. And the longer this thing goes, the more nervous I get about it, because I see how extreme it is. And I realize that the potential of the snapback is just tremendous.
Tim, could you maybe again remind people how they can find out how you've come across these points of view?
Yes, the research is there, and it's solid, and it's statistical base. I back it up. It's not just an opinion without a basis. If you look at the website, cyclesman.com, the subscription information is there, and I don't call it a newsletter because it's more than a newsletter. It's a research letter.
Thanks to our guests, James Corbett, Tim Wood, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.